Good morning, everyone. This is Crypto Ant, and I'm back with another video. And in this video, I'm going to be talking about some of the biggest mistakes in trading that I see happening all the time in the crypto markets. Obviously, since the time I've been here, doing my own research, understanding how the market works, how cycle works, etc. And I just compiled a list of certain things that I think this is obviously my personal opinion. Nothing I say on here is financial advice. I'm not saying to you do whatever. It's just literally my personal opinion on what I think are the biggest mistakes in the market. Maybe something I've done personally myself, etc. So I'm just talking from personal experience. And yeah, so let's get straight into it. So I think the first one is one of the toughest ones actually. I think not many people understanding how leveraging works and the dangers within it. So, for example, a lot of people when they first get into the market, maybe have like $1,000, $2,000, whatever they have, and they thought, right, how can I make 10, 20, 30K? And they literally start going all in with leveraging and not understanding obviously how it works, the dangers of it, and obviously use. And the first thing I will say, they use too much capital. They maybe put like 50% of the portfolio on one trade, hoping it's going to hit $2,000, $3,000, then double it again, double it again, double it again. And obviously, we know the market doesn't work like that. And yeah, and also I think using too much leverage, whether it's like, I don't know, anything above 10 is dangerous. When you start using 20, 30, 40, 50, 60, it's just out of control. And a lot of people try to catch picker bottoms or the tops to short. And obviously, when we find out a lot of this recently, especially with Shiba Inu, where people were trying to short it while it's still going up, not understanding obviously the power of retailers buying at certain levels and not having a micro top. And a lot of people was getting wrecked. Same with Axie a few months ago. They were trying to short it when it was back down to $18. Then it just went up the ballistic to like 150. Same with Solana, etc. And yeah, just using too much leverage, not understanding the correct level of leverage, not using the correct methods, whether it's isolated or cross, and obviously understanding the dangers of having these positions open. And I think the next point is no proper use of stop loss. A lot of people just run trades with no stop loss. They go into like minus, I don't know, $200, $300, $400, and just keep adding to the position, and the position margins keep building up, and the price is not reversing. The problem is with a stop loss, if you have a good stop loss of maybe 3 to 5%, which I want to talk further down, understanding obviously, okay, you lost maybe $20, $30, then you're able to rotate it to another trade, understand why that trade didn't succeed correctly, and then go from there. Again, the next point was, I just mentioned it previously, keep adding to the position when in negative. Again, this is very risky. You can easily spiral out of control. You can start adding too much margin just to lower your position in the trade. And then obviously, yes, sometimes it works of it going up, but most of the times the market bets against you. The problem, I think, before I carry on, the problem with leveraging, it's because it's shown to people around maybe social media. I'm mostly still it on Twitter. They flaunt all these P&Ls times 50. Look, I made 500, 600%, but not many people discuss how big the position size was. A lot of these position size could have been like $50, $100, and not big positions like in thousands where people put. And obviously this does a misconception to people, thinking, oh yeah, do your normal retail, yeah, I can do that. I want to do time 20, no stop loss. If it goes up, it goes up. If it doesn't, I lose all my money, I get liquidated, etc. And yeah, and I see that so much. I saw that in May. I saw a lot of people get wrecked in May. I saw a lot of people got wrecked in September, and just so many dangers with leverage trading. It's literally, this can be a whole topic of itself, but I'm just going to try and keep it short and sweet in this video. People not taking enough profits, not having an idea where they're happy with taking money out the trade. And then once they take the money out of the trade, just rotate back to another trade, etc. People just leave it, goes up, goes down, goes up, goes down. They don't take profit, so forth. Small compound wins better than one big win. Something I stress about all the time. especially in my VIP group. I say to people, take small compound wins rather than one big win, because these small compound wins eventually add up to more than one whole big win. And the last point is not doing proper technical analysis on the coin to see if you're buying at the right time in the market. Essentially, this is basically saying, are you buying at support, or is support holding where you're buying? And it does give you a chance to capture any further upside if the market starts going green again, for example. Or are you buying in resistance, which is a mistake because you're buying right into resistance where price possibly get rejected. Again, the combination of the stuff that I spoke about above is understanding obviously how the market works, how the cycle works, for example, and understanding where's the best time to take money in and take money out of the market. So the second point is risk management. And again, this goes well with leveraging and understanding how when to cut a trade off, for example, whether it's spot trading, which is a lot safer than leverage trading. Understanding that, okay, the market's dumping on us at the moment, it's pressed to take a small loss, rearrange, see where the market settles, then enter a trade again. The biggest mistake you can ever make is trying to revenge trade the market, especially if the market takes a huge dump on you. I think it happened a lot in September, where we went from like 52 or 53,000 back down to 40k. Everyone was over leveraged long at the highest 50s on BTC, and everyone just got absolutely annihilated in the altcoins. I think there was like 3.3 billion liquidations that day, and if you had a stop loss, that would have prevented you getting liquidated completely. And again, something I always say to people is put a stop loss. Doesn't matter if you lose, I don't know, 20, 30, $40. I'd rather lose 20, 30, $40 rather than being liquidated my whole margin space. And then once you do that, you think to yourself, okay, let's wait for the market to settle down and then we go again. Again, next point is how much you're risking versus how much you're gaining. It's called an R&R, risk and reward. This is a tool you can use on TradingView. It's called long position, short position, and basically estimates what's your return on investment. If you risk this amount of money, what can you get back if it hits all your targets? And again, it's a very simple tool to use. It's obviously, I would say, keep it between 3 to 5% stop loss. Any more than that, cut your trade and then rearrange. And then obviously, once you have your R&R and it goes to the upside, start taking money when it hits specific targets, for example, because not taking profit at the market and just leave it to unrealized gains is literally money that can be returned to the market. Next point is 3 to 5% stop loss and understanding the mistakes you make. Again, comes back to the stop loss and how important stop loss is in the market, and obviously understanding the mistakes you can make as well when trading. Trading journal is something I introduced recently to the group. It's basically tracks all the trade that you're doing, what went good, what went bad, understand what's the reason it didn't succeed or the reason why it went well, the market was pumping, was dumping, etc. And basically it just helps you keep track of the trade that you're doing. Again, when doing any trades, I'd suggest keeping it to a minimum, maybe like personally I use about 1 to 3 trades, nothing too crazy. You don't want to be in like hundreds of trades at the same time because it's hard to keep an eye on everything that's happening in the market. And then the best thing I could say is practice and keep practicing again. Yeah, this is probably the most important thing. I think for a trader is understanding how the market works and just keep practicing, understanding how the market works. Practice. Use small capital. Practice. What went right? What went wrong? How can I improve this, etc. The third point, not understanding how cycles work in the crypto market and how money rotates around depending on what's trading. Layer 1 versus NFT versus metaverse. So this is more of a understanding how cycles work in the Bitcoin market and how they work. You have a bull market for 2 years and bear market, etc. And then people thinking this year's different. We're not going to dump 89% across the market, which we will. It's just understanding obviously how the bull market works, why stuff pumps for a certain reason, adoption, etc. How looking at the mistakes people made in 2017, 2018, looking at this mistake people made further back, understanding how the signs of the market's about to blow off, Auckland's about to dump, etc. And I think this one is more of doing your own research, talking to traders, looking at YouTube, taking people's different opinions, understanding how the market works, knowing where to take profits in the market, and buying the generational bottoms, as they say, in the bear market. That's how the majority of people made money from transition between 2018 to 2021. A lot of people bought the bottoms on a lot of coins, held for 2 years, then it all just went up in the bull market and they sold. Again, this is something that's going to happen again in the next bull market, obviously, possibly in the next BTC halving. So it's a lot of things this is more of a personal thing that for you to do yourself, and understanding how certain coins trend at a certain time. And you have obviously the NFT craze with Solana popping off. Then you have the layer ones like Avax, Solana, Atom, Cosmos, whatever. And then now you have all the metaverse coins popping off one by one because obviously something's trending. And just understanding how different trends at different times, the coins in that trend always tend to pop off eventually. And eventually you're not going to catch every trade. It's impossible. There's too many coins. But just understanding how money rotates around. And yeah, again, this is just doing your own research and stuff like that. The fourth point is not understanding technical analysis before you look at a coin. Yeah, this is very simple. Just do your own research. Look at what the company's doing in the market. If you like a coin, upcoming projects that they're working on, is it bullish, is it not? Not a shit coin. Meme coins, as they tend to get nuked badly, which we know. And yeah, this point is basically just, it's something I emphasize for everyone to do. It's, even if you do it at the basics level, understanding how to do technical analysis, how to draw lines, support, resistance, etc. It's something that you need to really work on yourself. It's a personal tool, etc. So I think, again, technical analysis is very important. It gives you a lot of skills to learn, obviously, how money rotates, how coins work, where can you find support, where can you find resistance, moving averages, volume profile, etc. And yeah, just so forth. It's just, and also understanding just how the market works, how cycles work, how technical analysis can help you. It's not a guessing game. You're not putting thousands of dollars on a coin that you've never done research on and just say fuck it, go long 100 times, whatever. So yeah, it's just understanding that. And then the last point I want to talk about quickly is about taking profit and rotating money around. A lot of people tend to fall in love with the coins, and they call them bag holders. They literally die for the coins. They'll hold this coin for like years and years. It will go up. They won't take profit. It will go down. They won't cut the losses. It's just understanding, obviously, money rotates, and you need to always have like stable coin on the side, ready to buy coins that are about to pump or stuff that you like, or build up a good position. Cut your losses and move on to the next project. No hopium, for example, is a lot of people live and die by coins. I see that in XRP. People love and die by XRP, and ADA, Cardano, all these coins that have done well in the past. People just refuse to take profits on them. Yeah, it's going to go, I see people talking about it's going to go $5, $10, etc. I'm not going to take profit until then. It's always good to take profit when you're in euphoric mode. I think it's one of the biggest lessons I've learned myself over the time that I've been trading is when you get that feeling of feeling euphoric, you're over the moon, shit's pumping, everything's green, take profit. Just forget, even if it's like a little money, just take it, because that feeling that you have is a top signal of taking profit, because the market can just change instantly and just dump straight away, and all the money that you thought you make, it's all gone now, and you're thinking to yourself, damn, I should have sold. And one of the phrases in crypto Twitter actually I've learned is diamond hands and hold, understanding obviously how cycles work when BTC leads the way. So basically this is just like, yes, diamond hand works if you bought a support and then it's pumped like 100 times, etc. Damn, that's a good time to sell. But holding is not like when something's pumped completely, you're a good time to take profit, but you have unrealistic targets in your mind. It's going to go to 1, 2, 3, 4, I don't know, $100, etc. and the market, it's just like, okay, some coins have defied the odds. For example, FTM, Matic, what else has done really well? Just other coins, a lot of coins have done really well. That are literally what Cardano has done really well. I literally went from a few cents to a few dollars. Yes, some coins do that, but all these people, all those people that bought, I don't know, early this year before everything was pumping left, right, and center, and they sold. And if you didn't sell, Cardano went from like 10 cents to $3, back down to $2. I bet you the people that had bought at 10 cents never sold at $3. So yeah, so I try obviously to make the video a bit different to what I usually do. I normally do technical analysis and showing you what I do in general, but I thought this time, it'd be good to just do something different, understand, just talk about not many people are talking about at the moment, some mistakes you can make in the crypto market. And yeah, I hope you guys enjoyed this video. You can find me, don't know where I am, on CryptoAnt9. You can find my Twitter at is CryptoAnt9. I'll show you. There it is. Where is it? Our profile is here. CryptoAnt9. I've got a free Telegram page. I also have a YouTube page which this video will be posted on. I also have a VIP page if you're interested. I'll post details on that as well, where I go into more technical analysis stuff that I speak about. And yeah, so let me know your thoughts on obviously what I've covered, what you agree, what you disagree on. Everyone's got different opinions, so yeah, let me know what you think. Thank you.